How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on crude oil. With my speculations of US oil still going up, we can see that the price action is still supporting that bias on the daily time frame. Price is creating higher swing lows and higher swing highs. We can see here on Monday, price comes down, takes out Friday's low, and then runs right back up to our expected buy side liquidity above this swing high formation here. A couple episodes before, we talked about how price broke a swing low, which was down here. And we were thinking to ourselves, is that going to be a false break? And it was, because it breaks the swing low, which would be engaging in bearish momentum in my ideology, but then quickly reverts back. So it purges sell side liquidity below this swing low. If you go back and watch that episode, and then it purges right back to this swing high, which is buy side liquidity. Now, vice versa, if it breaks a swing high, that's a bullish momentum. So we're still in that stance of price going higher. Last episode, we talked about a fair value gap being formed. And I said that fair value gap is most likely going to show us where the next higher swing low is going to form. So we have one pending here. So this could be the low point. Maybe Tuesday does not break this low and it continues going up. And Wednesday, Thursday, Friday, we continue to see the price trend higher. I would like to see price now target this swing high up here. So I'm going to move the eye because we were eyeing it. Now we're going to look for this to be a target. And then also the 20-day, if to look back 20-day high here. So if you were to just take a quick zoom out, you can see we still have IPTA on our chart. Those levels are still displayed. And if you also notice, in a bullish trend, it is ideal to buy after down days. So just basic observations, no indicators on the chart, no moving average, no RSI, no lines crossing over, nothing like that, no volume. We can see that after the down days, there were very volatile days to be buying. We can see here, this day is down. Immediately the next day, it goes up. Another down day, it goes up. Another down day, up. A down day, up. Get three consecutive down days, which is still opportunities to go long each other day. But eventually we can see the market still picks up that trend. Down day, up, down day, up. That Larry Williams concept as well, small range to large range, right? The nature of the market cycle, the way it changes, it's always going to most likely try to get very condensed, and then it's going to look to explode with energy. We can see how it got very condensed here, a small body candle relative to the previous one, Thursday. Friday was smaller than Thursday. So it went large, small, large again. So that's a way you can have a little foresight and understanding what days or when you should be expecting larger days to start printing. Now, this works on all time frames. However, many people may overlook it because they're so based into certain things like, harmonic patterns, supply and demand, or they're looking for certain specific indicators to tell them when to buy, when to sell. When you yourself are the indicator, you're the operator, so you should be indicating to yourself whether you should be looking for a buy or sell, or when the volume is most likely to come in. I know my natural price action indicator is a small candle. So we can see that same ideology from Larry Williams' book, Long-Term Secrets to Short-Term Trading, is being played out here once again here in the asset class of crude oil. This price is going up still. I want to see price continue to target swing highs and buy side liquidity. In bullish trends, you will often see that there are moments and times where you do get the false breaks. We had that false break here. False break. Came right back. You even have one here. Price comes down and breaks a previous daily low and still runs higher. And technically, this candle here in itself is an outside bar candle. So tomorrow, according to Larry Williams, he would recommend traders not to trade. Wait to see what the next daily candle would break. Does it break this candle's high or this candle's low? Odds are, whichever side it breaks is the true direction of where the market is most likely looking to reside. Not all the time, but it's a small filtering process that you can use. All in all, I am still bullish on US oil. I know geopolitical tensions are rising, so maybe demand may increase and oil prices will be much higher. if things do not get any better, I do think oil will have to increase in price. And I think a lot of the analysts right now, or the professionals that are speaking on, many mainstream channels or mainstream websites, a lot of them are betting on oil to sell. I happen to take the other stance on the opposite side of the fence, and I actually like that. I like to be opposite to what everybody else is thinking. So everybody else is thinking bearish, I'm thinking bullish. You got to be different from most people, and I'm glad that I already arrived to that expectation that bullish prices for oil was going to most likely unfold. So we're going to look to see how this month comes to an end, because we got a couple more days left before the end of the month. We'll see exactly how it plays out. So all in all, still bullish. My speculation has not changed. We're looking for higher prices for oil, dollar as well, UJ as well, UCAD, USWC. I want to see those things go up. I want to see foreign currencies go down. I want to see gold go down. I even want to see Bitcoin potentially go down as well. And right now, the only thing that's up in the air is that correlation between the dollar and stocks right now. So if I put it side by side, so we got the DXY. So you can see the DXY has been bullish from the beginning of the year. And if we look at the S&P, we talked about this during Forex Fridays. We can see that the S&P and many of the large tech stocks, right, the blue chip tech stocks are just running high. So like Apple, Microsoft, Amazon, um, what else did I say? Apple. I said Apple already. Google. A lot of those are very bullish already. Many of the major players, right, in the tech world, just running higher. However, S&P and dollars should not be going in the same direction. That's a cracking correlation there. One of the two is lying, and I really do favor the S&P to be lying, and that there's going to be some type of reversal coming to the stock market sooner or later. If not, the stock market continues running on, and dollar will probably adjust and make that lower price action lower. Peace.